Welcome to Mass Timber March Madness. Our next speaker is Eve Picker, CEO and founder of Small Change. She'll be presenting on crowdfunding and mass timber.
I want to talk to you today about how mass timber buildings can be crowdfunded. But first, my name is Eve Picker, and I'm the founder of a real estate equity crowdfunding platform called Small Change. But before we dive into that, I wanted to tell you a little bit about myself so you understand where I'm coming from. So when I was little, I liked to play with Lego blocks. And so I became an architect. I studied in Australia at the University of New South Wales and interned in Vienna, Austria. But I really wanted to learn more about cities, not just buildings. So after working in Sydney, Australia for a few years, I took myself off to New York, where I studied urban design at Columbia University. And then, rather unexpectedly, I moved to Pittsburgh. There I worked as an urban designer in the planning department for the city of Pittsburgh. And the more I learned about the city, the more I fell in love with its spectacular architecture, its differentiated neighborhoods, and its very unique grittiness. So I began to remake buildings. Not buildings for the faint of heart, but abandoned buildings in abandoned neighborhoods that no one was ready to invest in. I tackled buildings like this one, the Liberty Bank building in East Liberty. It had been empty for 15 years when I bought it from the city. There was not much left to save except for the walls. Making the buildings functional and beautiful again was really the easy part. The biggest challenge I had was finding the capital to redevelop them. Neglected neighborhoods do not make bankers happy. So each project I tackled had its unique challenges, and each always had a financing gap, which I became pretty skilled at closing. Capital was found through a hodgepodge of public and private funding. Architects and contractors and family became rather reluctant partners. But despite the financing hurdles, the projects I built made change, and they were very successful. People came to these neglected neighborhoods in droves, and I loved every moment of it. And then around 2010, as banks continued to consolidate and become more skittish, and as federal funds dried up, it became increasingly impossible to continue the work that I was doing in Pittsburgh. My financial partners had evaporated, which brings me to Small Change. I took the knowledge I had accrued and applied it to the most difficult part of creative deal making, financing the projects. My knowledge, coupled with some brand new laws, permit us to innovate with capital creation not possible before 2016. Let me explain how. Banks are stuck. Innovation makes them nervous. They want to finance tried and true solutions, not new ones. But we need innovation and lots of it to build better. How can we break the cycle? How can we finance change? At the same time, fintech has arrived. What's fintech? Fintech is just the merger of finance and technology, and it has disrupted traditional financial services. It's one of the fastest growing industries. You've all seen and used it every day when you shop on Amazon, when you deposit a check using your mobile phone, when you make an online transfer from one of your accounts to another. There is a ton of innovation in fintech. And finally, along comes the Jobs Act. What's the Jobs Act? It stands for Jumpstart Our Business Startups. And it's legislation enacted in 2012 by the US government to help small businesses form capital. How? By introducing some very cool changes to securities laws that have shifted crowdfunding for donations to crowdfunding for investment. And this has opened the door for everyone to invest. This is really a sea change. Until now, real estate investment opportunities have been for only the very wealthy, the 3% of the population that we call accredited investors. The Jobs Act has made it possible for anyone over the age of 18 to invest. That's 100% of the adult population instead of just 3%. So what does this all mean? Banks are not going to lend to your co-housing project, your tiny house, your village on a barge, or your condos on a cruise ship, but the crowd just might. This is investing democratized, and it's really possible because of the internet. And this is how capital will be formed. As Steve Case so eloquently put it, crowdfunding is an innovation in entrepreneurial finance that can fuel the rise of the rest globally. And this is being played out in many different ways. So where's this all going? World Bank has estimated a global crowdfunding market potential of up to $96 billion by 2025. Just 9 years ago, that number stood at less than $1 billion. This is really the future of capital formation. There's one more thing to add to this story. Let's not forget impact. So what makes Small Change different from other real estate crowdfunding platforms? Not only can anyone invest in our platform, they can invest to make change. So we focus on 3 important aspects of real estate that we believe will incrementally make our cities and neighborhoods better places for everyone: mobility, community, and economic vitality. Every project listed on our platform is assigned a score based on how well it meets the change index. The minimum requirement is 6 out of 10. Below that bar, and the project is not a fit. Where does mass timber fit in? I want to show you some examples of how all of this plays out. But essentially, mass timber is innovative. It meets the small change index, and mass timber buildings need lots of financing options because they're new. And as I've told you, banks don't really like new. So I wanted to show you some examples of projects we've crowdfunded on Small Change. I can honestly say there's no mass timber buildings yet. I'm hoping one of you will bring one along to me, but it'll give you sort of an idea of the range of projects that we have helped raise funds for, and that the range is getting bigger every day. So here is a small lot subdivision in Los Angeles. We helped the developer kind of raise the last little bit of money he needed to build this. They took an old suburban house and converted the lot into 4 dense townhouse units. The houses are all net zero, and it's actually in an amazingly walkable neighborhood for LA, which is probably not something you've never heard before. But as I said, that it increased density, and it also addressed climate change. This is an entirely different project that is raising funds right now. And this developer is purchasing a long vacant lot from the city of Newark and building about 40 affordable workforce housing units. But that's not the really important part of his program. The important part of his program is that he intends to put 10% of tenants' rent into a savings account for each of them to help them build enough money to purchase a home. And along with that, he's put programs in place to help them understand their financial obligations and become financially literate. So this particular project is about far more than a building and housing people. It's about really changing their lives. This project in LA, we raised $100,000 for it really rapidly, and it's actually 8 little bungalow units that were designed to house formerly homeless people through a program that LA has developed to provide housing for the homeless. The developers are a nonprofit. They had a total $1 million budget. They didn't really need to raise the funds. They got an innovation grant, and they have a very strong relation with the CDFI, but they were really determined to let people in LA and the neighbors invest in this project, and it was very successful. And just to give you an idea of the range of projects we're looking at, this is a raise we just completed earlier this month. It's a very unusual program that these developers are working on. One of them grew up in the Berkshires in Massachusetts and has for a long time noticed the great estates that exist there that are really no longer used and will go to ruin if they're not renovated. So this is a great estate that they purchased and are renovating really for the sharing economy, so that you could go there and rent the entire home for an event with your family or a wedding or something like that. And they're really not only renovating the house, but the entire 40 acres, which are absolutely gorgeous. And they raised $890,000 on our site to do that, and they plan to do that again and again. They have quite a few estates targeted. This is affordable for sale housing in New Orleans. We helped raise the equity for this architect needed the equity to be able to build it, built the houses, sold them, and returned everyone's money with some profit. And that was very successful. He has a program where he is focusing on unused odd-shaped lots and to build these little infill houses in a market that it really is not affordable anymore. Another raise we just completed, again, entirely different. This developer has a plan to put the ownership of community shopping centers in majority Black neighborhoods into the hands of the people who live there. So for this particular shopping center, they needed $650,000 in equity. They provided 50% of the equity themselves and raised the other 51% or 50% from the community and other people who supported them through a crowdfunding raise. And they raised it very quickly in 5 or 6 weeks. It's a pretty fabulous program, and people from the neighborhood invested, and I think he has a waiting list for the next one. So that was very successful. Again, this project is in Philadelphia. It's a very complicated new market tax credit project, which is part of a very large revitalization plan in Sharswood, Philadelphia. There are various city agencies involved, leasing the land, lending funds to the developer. This is just one part of a very big plan. It is an opportunity zone, and so this particular raise also provided opportunity zone tax benefits to investors. It was not a huge raise for the size of the project, but it was very important to them that people in the neighborhood had a chance to invest in it. This developer is developing this food hall in a food desert that he grew up in. It is, you can see the little neighborhood behind it, again, a substantially Black neighborhood. He raised almost $300,000 on our site and has been gradually working towards opening this market. This is a neighborhood that's really never seen anything like that before. And this is actually a building I own. I did an early crowdfunding raise on. I was approached by a tenant who occupied about half of the building at that point, and they were a co-working tenant. They wanted to take over the entire building as a co-working building. So we needed to raise some money for improvements, and we did that on the platform. And finally, another offering that is live on our site right now. It is a portfolio of affordable accessory dwelling units, which are becoming increasingly visible as one way to solve the affordable housing problem that we have. So these are in Portland, Oregon, and it's actually a manufacturing company that has planned units around the ADU zoning regulations that have been implemented in Portland, Oregon. So they can install one of these units for $115,000 ready to move into in someone's backyard. And they do that by ground leasing the space from the owner of the home. And so the owner of the home gets some rent from it. They do not have to go out and raise money to build their own ADU, but they have the option to buy this over time if they want it. So I'm hoping that will give you some idea of how varied our projects are, and I am certain we're going to have some mass timber projects coming really soon. So I am available to take questions if anyone has questions.
Yeah, Eve, this is Greg. I have them. What are you looking at? Could you elaborate a bit more on the work with Stephanie Gripney of Impact Finance Center?
So, as you saw, we're really interested in making a difference, making an impact. We won't raise money for a Dunkin' Donuts on a green field. So, we really want to raise money purposefully for projects that can make places better for everyone. So Stephanie Gripney and the Impact Finance Center, they are really focused on educating investors on how to invest mindfully in impact. And we have collaborated to launch an impact real estate investment club. We've had 2 events so far, and a lot of people signed up. So the purpose of them are really educational. If you want to learn about impact investing, if you want to see projects that you can invest in, the Impact Finance Center really provides some very nice opportunities. So I have a question here from Reed, who asks, can this funding model be extended to, say, a mass timber manufacturing facility? And the answer is absolutely. We would love to help raise money for property technology, which really manufacturing facilities are. It's still real estate, and that's what we're interested in. So let me back up and say one other thing about this, Reed. What I've shown you is how we are using the securities regulations, in a very particular way. And they can be used in many other ways. And if you look out there for crowdfunding platforms, you're going to be probably confused about what you see, because there are actually 2 other securities regulations that I didn't talk about that are being used by other platforms. One of them only permits accredited investors. The other one permits very, very large raises of up to $75 million, which are more useful for loan funds. So along with that, they're really just rules. So you have a sea of platforms that have figuring out how to use them in different ways. This is the way that we have chosen to apply these regulations.
Eva, I have another question. This is Greg. I've looked a bit into crowdfunding, but I get quickly overwhelmed because I can't begin to keep track on the regulation or relevant examples of crowdfunded projects that may be applicable to what we're trying to do. What do you recommend to all of us who are essentially beginners out there, both as investors, crowdfunding investors, but also as who would like to come to you with mass timber projects?
Well, talk to me. It is confusing. And, one of the things about the rules we use called regulation crowdfunding is we're supposed to be in plain English so people can understand it. That's a tall order because the regulations are complicated and burdensome. But a good funding platform, a good funding portal like ours, will really break that down for you and make it easy for you to offer securities, which is what you would be doing when you raise money. So on our platform, for example, we're not supposed to help you with the issuing documents when you do such a raise. So instead, we've created a set of white label documents for a disclosure packet, which is the packet that will be registered with the SEC, the Securities and Exchange Commission, and the packet that really answers all the questions that you're required to answer under this rule. So we basically have a template, a set of documents that's 95% template. And if you come to us with a good set of numbers, a good business plan, the sort of business plan you would show a bank or anyone else you're looking for funding for. Tell us a story about your project, why you're doing it, what you hope to accomplish, how much money you need and how you expect to pay investors back, and about you and about the marketplace. And with that information, we can populate that disclosure packet, create a draft, go back and forth with you until it's completed, and then complete all the steps of registering an offering like this. So we really provide a very streamlined process to simplify it for you. And once it's listed on our site, investors invest electronically. It's completely electronic. We manage opening an escrow account, which is required under the rules. We manage all the educational information that's required to give to investors, all the notifications. We manage giving them the money back if they want it back. At the end of the offering, we basically wire you the funds and a list of your investors and investor agreements. So we're trying to take the complications out of this to make it a viable process for developers who are being innovative and already have their hands full.
Thank you. And here's another question, and I don't mean to just direct it to my own needs, but I know
Sure.
there are a lot of innovators in architecture, in builders, and even mass timber fabricators like myself. I think many of us are familiar, at least looked at pro formas, so we know the numbers have to work, it has to pencil. We could download your white label documents, but what do you recommend? And not step-by-step process.
I don't recommend you download the documents. They will overwhelm you. In fact, we have an intake form. We don't actually share those documents until we get the information we need from someone who wants to raise money, because it's pretty overwhelming. So we just have a simple intake form where we ask you the name of your company, who's in charge of it, how much you want to raise, what's the minimum amount you will accept. Tell us about the project, give us the narrative, give us the market narrative. And with that intake form, we draft those documents, and only then do we share them with you. So the step-by-step process for us is we have an early form, which we like people to fill in. It's on our site. It's called Let's Get Started. We can have a much more sensible conversation with a developer or someone who wants to raise money if we understand what they're trying to do. So we ask that you just fill that in, even if it's not a perfect fit. And then we arrange a meeting if we like what we see, if we think it's a fit for our platform, we arrange a meeting and go through the process and just have a conversation to make sure everyone's on the same page. And then if you like what you hear, you say, okay, let's move forward, sign a listing agreement, and then we start the process of putting that information together.
And another recommendation, again, maybe for my own needs, but let's say there's an architect or a builder who hasn't worked with outside investors previously, and do you recommend they form teams to do?
It's not really about the outside investors. So for us, it's more that it's very difficult to do this if you're a first-time developer doing a small project. It's if someone has at least built something before, whether it's a real estate project or a business or borrowed money from a bank before, they have an idea of what we're looking for. If they've never done that before, it makes it very tough, and I wouldn't recommend that for someone who's really never had experience even going to a bank. It just requires an understanding of what a financial institution wants to look at. But the team itself is not, managing investors is really about just communicating with them. There's two things you have to do if you have a group of investors. And it doesn't matter if you have one investor or if you have 100, it's really the same two things. One is you have to do your tax accounting properly. You have to issue them with a K1 or whatever you need to issue them with once a year to keep the IRS happy. You have to make sure that they're on your books properly so that you're dispersing the right amount to them. So having a good bookkeeper is key. And the second thing is just communicating with them, having a plan to send a quarterly email or create a landing page on your website where you can put updates or some way to talk to them. We've been actually organizing little Zoom meetings between our developers and investors, and they love that. It's 45 minutes of question time in front of the developer, and they get to know them, and it's good for everyone because, you know, the more the investors get to know developers, the more likely they are to invest again the next time. So that's kind of, for me, those are the two key things about managing investors. It's just communicating.
No, thank you for that. I guess here's my question to follow up. Online resources, so the Mass Timber community can kind of self-educate itself as it explores the small change platform and develops projects. Are there books or websites beyond just small change?
There are certainly websites, but again, we all do it differently. So the websites that use this particular rule, regulation crowdfunding, are called funding portals. And you can actually look for funding portals on the FINRA site. FINRA is the Financial Regulatory Agency. And so you can find all of them there and you can look at them. I would say probably only half of them are active. There isn't another funding portal that I know of that really works in real estate and impact in the way we do. There are some that are focused on Main Street projects. There are some that are focused on raising money for businesses. They're all doing something slightly different. I would say we're pretty unique in our take on real estate and who we want to help raise money for.
Beautiful. Thank you. I see great potential in the mass timber because I haven't heard anyone else, or even prefab, but it's specifically mass timber. I haven't heard anyone else in the crowdfunding world, not that I know very much about it, who's been even looking at mass timber. So I'm pretty excited, especially here in the Pacific Northwest, where there's so much mass timber activity already.
Yes. I mean, if someone has an example that they want to share, that would be really good. Oh, here someone's asking, what is the typical time frame from completing this prospectus to closing the investment round? I wish there were typical. So I like that this person has said completing the prospectus. So here's what our process looks like. We sign a listing agreement with a person who wants to raise money. We send them the intake form. And when we receive the intake form back, we quickly draft the prospectus or the disclosure packet or whatever you want to call it. We'll call it a prospectus because that's what Eddie has called it. Now, that drafting, we have finished the prospectus in as little as 24 hours, and it's taken us as long as 4 months. And the difference in timeline is really all about the developer. 4 months is someone who really doesn't quite know what they're doing yet, and they are just not able to answer all the questions that are necessary to answer when you're going to get investment dollars. Or even, they can't even really answer all the questions that the SEC wants answered. So we're looking for projects that are pretty well thought out. It doesn't have to be 100% thought out, but you really have to have a pretty good idea of what you're doing. So the time frame for completing the prospectus can vary wildly. Once we have the prospectus complete, We need about 10 days to go live on the platform. And in that time period, like if you raise over $107,000 on regulation crowdfunding, you must get a third-party financial review. Even if you have a brand new company that has never operated before, you must get a third-party financial review. So in that last week before we go live, we make sure the review is complete. We open the escrow account. Neither of those can happen until the prospectus is complete. We do the background checks that are required, and we build the campaign page. So we need about 10 days from the prospectus complete to offering live. And then after that, it is crowdfunding. It can fill very quickly if you take marketing very seriously, and if you have a good crowd of people following you, you could fill it very fast. I think, or it could take a little longer. We raised $890,000 in, I think, 3.5 months for the one project, and that team was pretty focused on reaching out to all of their friends and family. I mean, they didn't miss a high school buddy. So that was a pretty good raise, and I expect next time it'll be faster for them. We do have account holders on our site, and they will invest, but they're not going to constitute 100% of your offering. People want to invest in people and projects and places they know. So your crowd really matters. So that time frame could really differ as well. I'm sorry I'm being so vague, Eddie. So Greg has another question. Are there big differences from one state to the next, or are the financial regulations largely consistent or similar across state lines? For the rule we're using, regulation crowdfunding, it's a federal rule. It doesn't matter what state you work in. There are other rules where states do matter, but this is not one of them. I'm seeing if there's any other questions.
Did you see that one from Kurt Hodgson in the Q&A?
Yeah, he said, thank you for your seminar and what you're doing. I'll reach out to you in England. Yeah, he wants to ask questions, but he hasn't actually asked a question. Kirk said, historical buildings, are they more difficult? Well, they might be more difficult for the developer. It's the same thing for us. So the offering we did, the Great Estate is a historic building, and they did very well. I think it's more about the story of the project and how you're going to appeal to your crowd that matters. Historic, ground up, manufacturing, I think they're all interesting. It really depends on what you're trying to do. Do a significant number of your offerings involve prefab buildings? Oh, I don't know about a significant number, but a growing number. We've had at least 4 of them so far. At least 4. And I expect to see more.
Beautiful. I think I'm not seeing, okay, there's another one from Kirk.
For manufacturing, what level of investment do you need to start? I'm not sure I understand this question. Can you elaborate, Kirk? For manufacturing, what level of investment do you need to start in percentages? How much money down do you need? Well, that's an interesting question. So you're asking, how much skin in the game should you have versus how much money should you raise from the crowd? Is that what you're asking? Okay, he said yes. So there's no rule, but I think investors are very wary if you're looking for 100% of the investment from them. So skin in the game matters. I don't know if there's a percentage I could tell you works and doesn't work. But it does matter. I think investors are leery of developers who put forward a project and don't have any of their own money involved.
Eva, I have another question specifically about manufacturing. Example, we're building a new manufacturing factory in Oregon, and when we look out, there's not enough mass timber manufacturers, and the venture capital industry generally wants to go asset light, so they don't like to invest in people who manufacture things. I think they don't see it as scalable or the margins as big enough. On the other hand, there is a big crowd obviously that wants to invest in real estate. So there's a big gap there.
No, I think mass timber is absolutely in the real estate realm, and I think absolutely venture capital is not. It would be a very unusual mass timber project that would interest venture capital. Venture capital is interested in big multiples and a quick exit, and what you guys are working on is the long haul, which will pay off in the long run, and requires a lot of patience. So yeah, as I said, I mean, we're interested in manufacturing. You can see we have one. Actually, it's really a manufacturing project on our site already. The ADUs are not built in situ; they're delivered and craned in. We're interested in any prop tech like that. I think mass timber is an important part of the real estate industry's future. So would love to help.
Well, thank you. I don't see any more questions coming in. I will be asking my own questions of you directly because obviously this is a big area, and I think hopefully we can get more deal flow by helping build and connect the mass timber community.
If anyone has questions, is my email address on the event?
I can make that public if you'd like.
Yeah, just Eve at smallchange.co. And if you lose it, you can find an email on the site. So pretty easy.
Here's one final question from me. There's quite a few people that are participating from other countries that are not in the U.S. If they're entrepreneurs looking at the U.S. market, any recommendations do they would need to find local partners? Or
no, not necessarily. So this rule requires that if you crowdfund, you must have a U.S. entity. So it doesn't say that people controlling the entity must be U.S. citizens. You just have to have a U.S. entity. So that's the most critical part. But I think it's maybe a U.S. partner might be more important from a marketing point of view, because you do need to have sort of an investor base. Now, you can have investors from anywhere in the world, and we have had investors from various countries to date. We've been opening the doors to that cautiously, but it's very possible. There are a variety of other rules that come into play then, but it is as simple for someone in Australia to invest on this platform as it is for someone in the US, except perhaps getting the money to the bank. But even that is simple nowadays. There's so many ways to forward funds internationally. So it's a tricky question. It really depends what they're trying to do. There are also a variety of crowdfunding platforms popping up in other countries, and but the rules are different everywhere in the world, so I can't really speak to those. Someone else said, Zach said, I'm wondering, as someone with a design background, how have you learned so much about finance and project development? I just, I'm driven by challenge. That's all I can say. The real estate portfolio I developed on my own ended up being all about finance and project development, although I just love design. That's really where my heart is. But it's always been about the numbers, and it became clearer and clearer to me that was what was driving everything. It's all about the numbers. It's all about equity and finance. And I didn't expect to become a securities expert. But to be able to do this, I really needed to become a securities expert, and I don't shy away from a challenge like that. But for anyone who's working on projects like this, who really wants to build, you have to find a way to finance them. And um, the thing that I really learned in Pittsburgh, that my home country is Australia, and I think Pittsburgh was really a transformational point in my life. Um, it was a very downtrodden city when I came here. It had lost more than half its population, and it was down on itself. And yet I saw all these really interesting opportunities as an outsider. Um, but I had to learn about soft markets and being very patient about waiting for a market to mature, and that it was just all learning on the fly and trying to figure out where I was going to get money from, and sort of moving from one source to another. It depends how driven you are to actually build something. I hope that's an answer.
Oh, thank you. I'm impressed. It's a lot to take on, to not only learn that world, but to innovate in that world.
Yeah, maybe I wouldn't have done it if I'd known. But here I am, and it's been a really interesting journey. So I would suggest, like, if anyone out there is interested in experimenting with this, start with a project where this is probably the best recommendation I could give. It's very difficult to have a timeline and to expect crowdfunding to fill that financial need for you. The best position you can be in is to have a financing plan where you've really covered your costs, but some additional equity is desirable but not essential. And then and so it's something happening at the same time as the rest of your financing plan, if that makes sense. So let's say you need $1 million in equity, and you know you can get it at a high cost from a hard money lender. It's not your desirable path, but you have that plan in place, and you come to me and you say, okay, let's try and raise $500,000 at this rate and see if I can raise it. Then you can go back to your hard money lender and say, well, I don't need as much as I thought. So it's much easier trying this for the first time if you don't have an absolute need. Does that make sense? And try something small. And my other recommendation is, this is a very funky little rule, and it requires very simple legal structure. So if you haven't incorporated your company for your project, don't until you talk to me. We will make it really super easy for you. We know how the rule works and what will work and what won't work. That way we can keep everyone's costs down.
There's a question in that regard. I know a lot of investments go into single entity LLCs in the US. That's what I'm seeing for real estate investors or even builders. So what is the legal entity or entities that people typically are investing in? I mean,
well, there's no typical. See, this is what sets regulation crowdfunding apart. Let me back up a little bit. This little rule called regulation crowdfunding lets anyone over the age of 18 invest. And that is a huge step. It's the democratization of investment. And the biggest concern the SEC, the Securities and Exchange Commission, had was how to protect those investors. So that plays out in many ways. The rules require investor educational materials. They require us to make notifications at very specific points in time during the offering. They require us to give someone their money back up until 48 hours before the offering closes. So it makes it gentle for a first-time investor. They also require that there are no communications between someone raising money and an investor except through the funding portal. So if you go to any of our campaign pages, you'll see at the bottom of the page, there's a chat room. And if you have a question about that offering, you go there, you post the question, the developer posts the answer. The reason for that is that the SEC wants everyone to see the same questions and answers. So this is a non-solicitation rule. There's no special favors for anyone. Everyone's got to see the information in the same place at the same time. That's really the core of this rule. So the legal structures really follow that, because the easiest way to do a regulation crowdfunding offering is to have an LLC that is a project entity that actually owns the project, and the investors invest directly into that LLC. They're investor members. They have no voting rights. You have no right to ask them for more money, but they are investor members in that project entity that you control. And that's what the SEC wants to see, because you manage them and you're going to look after them. Very typically in accredited investor deals, accredited investors will invest into a single purpose entity over to the side that then turns around and invests into the project, and that is not permitted under this rule. So, which is why there are a few other options that we have, but this is why if you are considering crowdfunding, talk to us early so we can help you think through the right structure, so you don't end up in a huge legal tangle.
I typed in my question, Eve.
Oh, Greg,
yeah.
your question is, do you recommend people considering making an offering on your platform begin by making investments in some of your current offerings to become more familiar with your process? Well, that would be lovely. I would love if they do that. You'll certainly become familiar with the investor process, but it won't really give you a clue as to the issuer process, the process of raising funds. The best way to do that is to look at it. I mean, even if you look at the offering packets for each project, you might get overwhelmed. I just need to stress that 95% of that packet is template. So if you do go down that road, don't go get overwhelmed, because we pre-prepare a lot of it. There's another question here from Eddie. How does your organization get compensated? So under regulation crowdfunding, we can be paid a percentage commission of whatever you raise. That's basically how we get compensated. Investors don't pay anything to invest. They invest for free.
Okay. I think that's not any more questions coming in. So if that's the case, maybe we'll end there.
Yes. I hope that was helpful. Just reach out to me if you want to know more. I just interviewed someone. I have a podcast as well at evepicker.com, Rethink Real Estate, and I just interviewed a very exciting mass timber project, which I hope will go live next week.
Thank you.
Thanks to everyone. I wish I could see faces, but I can't. Bye.
Goodbye. Thank you for your time.
Okay.